Welcome this morning, everybody, to the Property for Good podcast, Friday the 9th of October, and very pleased to have Kristy Brown and Simon Kerr along this morning. For those that don't know, Property for Good is a free Facebook group where we're trying to create it as a bit of a hub, a bit of a nexus for people interested in the supported living space, whether that be investors or providers, people working in the sector, in other capacities. It's a bit, we're trying to just create a scenario where people can get together and share ideas. I'm really pleased this morning to have Kristy and Simon on the call. So hi guys, thanks very much for coming along. The vast majority of the session this morning will be spent talking to Kristy and to Simon, but just to give you a little bit of an insight into what we're going to cover off. My business is Cornerstone Place. I'm just going to give you a quick update on what we're up to. We'll run a quick poll, and then we'll spend most of the time talking to Kristy, Simon, and doing a Q&A session as well. So Cornerstone Place is a property development social enterprise set up by myself and Richard Kennedy. We're dedicated to ending street homelessness across the UK, and our clients are charities and registered providers. So we're bringing property experience, a funded solution, and we've got a mechanism to share some of the uplift and the value that we generate in those projects with the charity, and we're getting some great traction. But it's not without its lows as well as the highs. So the project on the left on your screen, the black drawing, that was our site in Banbury. We've gone a long way down the road with it, and right at the last hurdle, it fell over at planning. And with the particular route that we were using for permitted development closed as well, so we couldn't go to appeal. And the reason it fell over at planning, one is was to do with the measurement of the room, because we couldn't go above 500 square meters, and depending on how you measure it, and it's not clear, we're either just over or just under, but the planners said we were just over, so that was that dead. And the other reason was they had an issue about access to the building, with cars potentially going up this slip road, which was a bit of a misnomer really, because there have been people walking up and down that slip road for the last 30 years and no one's ever got hurt. So yeah, that one died. It was a real shame. We're working with a charity in Oxford, and they had commissioned income specifically for delivering services in this building. But you've got to pick yourself up, dust yourself off, try not to think too hard about the money that you spent and lost, and find another building. So we're working on that. The building in the middle is something that we're working with a national charity that specialises in children's homelessness. That's their site in London, and we're hoping to do something similar in Manchester. We've identified a parcel of land for them, which is a bit expensive, but we're looking at it for them and trying to work through some ideas. So that's quite encouraging. And then on the bottom right, down in Tameside, we're working with another charity up in the northwest, homelessness charity, and we should complete on the purchase of a building that we're funding. We're funding the development for them, and we should complete on that next month. So we've had again a few challenges on that one, but I think we've got that resolved. So overall positive, but losing the Banbury site, that wasn't one of my favourite days of the year, of what's been a pretty grotty year anyway for a lot of people. So, but never mind, these things happen, and that's par for the course with running a business, I think, isn't it? Anyway, quickly, let's run a poll. I mean, we haven't got that many people on the call. I think that's a symptom of not having run them over the summer holiday period, but we will run the poll anyway, and hopefully this should appear on your screen now. And the question is, how involved are you in the supported living sector? So if you just take a second just to answer that for me, please. Can you see it okay? Can you not give me a...
It won't let us vote.
Oh, won't it? Okay, I don't know what's going on there. Okay, well, I have got some responses and some don't appear to be working, but okay, so we've got active and learning, and investors on the call as well. So and obviously interested, not yet started. Now, I think if you're interested in the sector, and also from an investment point of view, we've got the right guests on for you. And that sort of is a neat segue into introducing Kristy and Simon. I won't take all of their thunder, and they can obviously introduce themselves. But I first got to know Kristy a good few months back now through a mutual acquaintance, and it was pretty clear to me very quickly that what Kristy and as by extension Simon are trying to achieve is something really positive. I mean, it's impact driven, which is exactly where we're coming from, and personally I think this sector needs to really keep focused on rather than returns driven. And that's not to say it's not possible to get good returns in the sector, it is, but there's ways of doing it to ensure that you get the impact, and it's all done ethically as well. So that was it for me. That was an immediate overlap in terms of values, and thought, okay, this is somebody I really want to sort of understand a lot better. But also some of the circles that Kristy and Simon work in particular with my last guest, Amy Val, they're very closely working together there. It just seems there's so much synergy. So obvious choice for a guest on the podcast. And now what I'd like to do is just hand over to Kristy and Simon, just for you guys to give you a bit of an introduction about yourselves and also what you do.
I'll let you go first, Simon.
Sure. Thanks, Kristy. Thanks, Dave. Yeah, so my actual normal work history is very different to what we do now. So I spent 25 years in the car audio sector, so building big, silly car audio systems for people. That's what I did for a big chunk of my life. And that really changed. I mean, myself and my wife have always been a bit interested in property. We still have a property in Australia. We did some work over there, and we had sold a few houses over there. Moved back to the UK 4.5 years ago now, something like that. Enjoyed ourselves for the first couple of years, did some travel, saw the whole of the UK, really enjoyed ourselves. But then we kind of, then it's time to settle down, get back to business. Did some training through Legacy, and that's where we met Kristy. So, and really this business was kind of spawned out of sitting in those classrooms, wasn't it, Kristy?
Yeah.
Really. I mean, from that point onwards, our life changed, our direction changed, and this business kind of grew out of conversations in those classrooms. So that's really me, car audio installer, through to doing this now. So it's a very different section of the world. But really what my job in the business is, I tend to handle more of the day-to-day conversations with investors and clients and all that. Kristy handles more of the conversations with the providers. So it's a very different skill set for both of us, but it works really well as a partnership. So that's kind of my background history.
Kristy?
Yeah, so I've got 17 years public sector finance background. So my background is I worked heavily with the Department of Work and Pensions, negotiating all the funding bids for Treasury, and that was across the piece for all the different elements of the Department of Work and Pensions, one of which was housing. So a lot of my work used to feed into a lot of the green and white papers. I've still got a lot of prevalent contacts there, who I'm very, very grateful for, and they've helped me on my journey, and very, very excited what's happening here. And I'm more happy that I'm affiliated with Amy and the work that the Social Strategy Group are doing. So that's kind of my background. I do work a lot with local charities. I'm a Blackpool girl, so I'm down in the northwest. Work a lot with soup kitchens. At the moment, they've kind of been held off, so I kind of make sandwiches and drop them off. And it really gets to me. No matter how often you go and take those sandwiches, the queue never goes down. And for me, that that's really important in this sector, because you're seeing how many people are kind of there on the streets. It's not necessarily, as well, what kind of gets me is that they're not necessarily people that are generally sat on the street homeless. These could be mothers with children who just need to feed them because they need to use their money to top up their bills. And that's where my passion lies, helping these people, because homelessness and being on the brink of homelessness isn't just necessarily kind of because you're on the streets, which is kind of where people seem to see people in this sector. I
know I think it was Crisis alongside PwC did some analysis, and whilst the figures can change depending on who you're talking to, but there were around about 5,000 street homeless in the UK, but 380 hidden homeless. These are people who are sofa surfing or in B&Bs, or, you know, they're sharing with parents and they should be in their own place and they're just skint, you know, and that kind of what you're talking about there about, you know, families having to go to soup kitchens and so on is just, it's going to get worse as well, actually, as people start losing their jobs, you know, more and more. So, but were you doing that before you started Auxilium? Right,
Yes,
okay.
yeah.
So this was a
I've
very
always
natural
been,
transition for you.
yeah, and I also was a Prince's Trust coach
Okay.
for a while. So
All
I
right.
used to help a lot of youths get back into work. I call them my little children. I still have a lot of them on my Facebook, and I follow their journeys, and they're doing absolutely phenomenal work. That was when I think probably my eyes were first opened up to that. Was about 11 years ago. And it really opened my eyes, because a lot of these young people had never had the opportunity to excel themselves, and they were some of them were homeless, they were living in hostels, they needed to be rehoused, and it just really opened my eyes, and I thought, I need to do something here. So as Simon said, we started off on an accredited property training programme. People still say to this day, and I don't remember saying this, I think I was talking to you about this the other day, Dave, that I was sat in the classroom and I really, really despise the word DSS. I don't like it. You know, don't kind of brand people with that. I just don't like it. It's just not me. But somebody said, 3 or 4 people said, oh, I would never take DSS into my properties. They absolutely trash them. And I said, well, everybody deserves a home. And if they have the right support, then they'll always get through, won't they? Now, people still remind me of saying that, and I can't remember saying it. But,
but did that happen before you and Simon started talking to each other? Or was that the catalyst that got you guys talking to each other? Because I made a note.
The catalyst that got us talking was Peter, Simon's wife, because we were in a classroom, and Peter and Simon, as you can tell, have got a very strong Australian accent, but I'm actually Australian. I was born there.
Oh, really? Okay.
So I was just having a bit of a laugh, and they were going down Robin, and I said, well, actually, I'm Australian as well. Well, Peter was straight over, wasn't she, Simon?
It's like a bloodhound of Australians in a room. She really is. She thinks out her own kind.
And then we just got on like a house on fire. Got to know each other, played a lot of Cash Flow. I don't know if you've heard of that game, but it's absolutely phenomenal. We still play that to this day when we meet up, don't we, Simon? And
is that the Robert Kiyosaki game? Right, okay,
and then Simon went on his mentorship, so I'll pass over to Simon to kind of explain, because it was his idea. I'm never going to take that away from him. He came to me with this idea, but knew I had the experience to support him.
It's just before you start with that, Simon, it's interesting how you guys got together, you know, at an event. Richard, my business partner in Cornerstone Place, we sat next to each other on a course almost 3 years to the day, in fact. It's and it's our relationship in terms of the work that we're doing has evolved, and what we offer as a company has evolved, and it continues to evolve as well. But it's funny how, you know, you can just be suddenly in the same room as someone else, and then all of a sudden you're business partners.
Exactly.
But please carry on, Simon.
Yeah, no, it's fine. I mean, just touching on that for a sec. I think what we commented on this the other day, when you get into this world of property and supported living and all that, you tend to hang out with people with the same mindset. You can't hang out with people who don't anymore. We kind of found that the other day. We had a good chat about this, didn't we, with a few friends, that the friend circle changes hugely, because the people you hang out with now, they have to have the same mindset as you. Otherwise, you're like, oh, come on, what are you doing? You know, so we tend to find we build more relationships nowadays because the people we spend time with are people who help us grow, and they're interested in our life now in that sector, and it's just a different world now, isn't it?
Yeah.
So when you say mindset, can you just expand on that a little bit, please? You know,
I think it's work ethic is partly. I mean, there's no such thing as a 9 to 5 in this game. It doesn't exist. You know, you talk to your friends. You talk to your friends who used to do a 9 to 5, and they're messaging you at 9:30 at night, going, "What are you doing?" I'm still working. You know, and they go,
I have calls with providers. I've had calls with providers at 9 o'clock at night, because in the day they're supporting their customers, and I understand that. So you work around them.
It's just there's no such thing as you don't turn off. I mean, because I do a lot of liaising on social media with landlords and property owners, most of that happens between sort of 7 and 10 o'clock at night when the kids have gone to bed, and you know, so that's generally why I spend most of my time, my head buried in my phone, you know, or in the laptop, because it's just you work the hours you have to work. Basically.
Yeah, we find it hard, don't we? Because a lot of people will say, I watch such and such on Netflix, and I'm like, what is that? I wouldn't have time to even watch it. You know?
Okay.
It's really, really hard. And I love that, because that's kind of their day-to-day life, but I just wouldn't have a clue. I wouldn't
Yeah,
know what's
that's
going on.
funny.
We've got a
You
telly,
really,
but it's hardly switched on.
you really should watch it.
He doesn't even know what a telly is. He doesn't even know what Peppa Pig is yet. You know.
We have a line in the sand usually. It's sort of 9:30. If I don't put my phone down by 9:30, then I have a very angry wife sitting there.
You and me both. Yeah, that's
There's
right.
a line. We have a line in the sand. We have an agreement, but
Yeah.
but otherwise, it just doesn't happen. You know,
No.
the business doesn't evolve and grow.
I also have a rule which on Saturday I don't work. You know,
Yeah.
I just, even though inside me there's that drive to just, I mean, I might have a look at my emails, but I won't. I won't work unless I've got up really early and no one else is awake yet.
Yeah.
And then Sunday evenings, you know, he kind of drifts into getting ready for the week. But okay, so let's talk a little bit more about
Sorry,
what you
where
were
we
starting
start.
with, Simon.
Sure. So I was doing my mentorship, which was part of my training program, and I asked the mentor. I said, "Look, we have an interest in social housing. You know, where do you find provider contacts?" Because I said we've tried ringing them, it doesn't happen. He goes, "Oh, it's too hard. I just buy them off somebody. I buy my contacts, basically." I said, "Oh, that's very interesting. How does that work?" So he kind of explained it to me, and it was really over a 3-day mentorship that would have been a 10-minute conversation, if that, maybe even 5 minutes. It wasn't very long, and that kind of started stirring my brain, really. And I thought that's very interesting. And so then at that stage, when the world was normal and alive and we could go to networking groups, I just started talking to people to people about, would they be interested in somebody helping them get involved in the social housing world and supported living? Would they be interested in paying somebody to get those provider contacts for them and then build that relationship? And everybody literally said yes, because they've all tried. I mean, we all know what it's like. Well, it's not that easy to pick the phone up, ring a social housing provider and get a phone number and a contract. It's not that simple.
I think you're absolutely right, because, you know, first of all, you've got to be the kind of person who's okay with picking up the phone and doing a cold call, and not everybody is. And then you've got to have the skills and the knowledge of having a conversation, which doesn't make you just sound like you're someone who's come off just off a training call, for example, training course. And then once you actually have got to speak to the right person, then you've got to put a compelling offer forward, haven't you?
Exactly. And you've also got to know, I mean, the business structure, how it works, Kristy does 95% of those calls, just because it's you have to know the language, you have to know what to ask for, you have to know the structures, you have to know the conversation has to be done right. And I mean, Kristy's amazing at it. She's brilliant. You know, I'm a bit
Providers recognise though why I'm going in there, because I go in there on, you know, I'm in there for them. I want to understand what they want. I want to understand their needs. It's tenant centric and user driven for me, and that's the most important thing for me. So when I go in, that it's not about me, it's about them. I want to know what they need, and that's so important.
And what do you find are their needs typically?
So at the moment, massive demand for self-contained units. So and that's probably because of the directives that are coming from Roche about abiding by COVID regulations and things like that. So and let's face it, we have a lot of single people on the streets or defined as homeless that need somewhere to stay, whether it be temporary accommodation or move on. So yeah, that's kind of what they look for. We do find HMOs work in quite a lot of areas of the country, but this is what we always emphasize. I can't even say the word this morning. Emphasize to our customers is that just because you bring us a property, we're dead honest about it. It might not be right. You know, the property to me, and this is something Amy taught me very early on in my journey with Amy, is that the property is the very last piece of the jigsaw. You go and get, you know, you have to understand what they need, then the property comes. Most of the time we can help people, can't we, Simon, because of the demand? But I just, you know, you have to emphasize that to people. It's really important.
So,
I mean,
sorry, go on, Simon.
That's fine. I was just about to say that what we generally tend to work in the world of where the most need is. So bulk kind of housing. So your general homeless, your refugee providers, your low level, you know, care, where there's a huge amount of demand, but it doesn't necessarily is the most high paying part of this world. And we do that because we want to provide as many homes for people as possible. I constantly spend my time talking to people. They're like, well, can't I get more money out of this? I said, probably, but you'd have to build a very bespoke custom property to do that. Do you want to do that? No, I want to just.
So you have to put the money in to get the return. So it probably equalises itself out, which a lot of people don't seem to realise. They get very focused on enhanced rates.
And there's a trade-off as well, isn't there? There's a trade-off, which is that the income might be a bit lower, but that property could be let for 10 years.
And it's sustainable,
and it's sustainable,
we kind of always say that's my thing. We're a sustainable pathway between the provider and the property owner, whether that be land, a developer, somebody with a house. That's what we're doing. We're creating that sustainable pathway and making sure that that's going to work. So
I'm constantly having conversations with people about sustainability. It's literally where I spend half my conversations now. I mean, we got offered a block of flats the other day in the north. It's renovated, done, has a contract on board for 5 years, and the rates are very high. And I won't even pass that on to my investor base until we actually get that provider to answer their phone, which is being fun and games at the moment.
They're just so busy. They're just so busy. So
sorry, Simon. In that instance, then, just let me understand it a bit better. So you've got the provider, but they're not answering the phone, but they will do eventually. You've sourced a building, and basically,
it's actually just a property sourcing agent's come to me and said, we have this block of 16 flats. It's already tenanted with a 5-year social housing contract. There's a rent review in place. It's basic general homeless. It's in the north.
And then you're looking for investors to pick it up.
Well, the problem is...
but we want to make sure it's sustainable, because the rents that are being paid at the moment, we know.
Okay.
They're £15 above LHA rate in the area in the north. Which almost always, in this model, it's £15 below LHA rate.
Yeah. Okay.
So you'll know that yourself. In doing supported living, where, as we say, you would put money into the project to maybe get that bit more return, but it actually equals itself out in the end anyway.
Yeah, the for those on the call or watching the video later, for the benefit of those that don't know, and I can only talk from our experience when we're structuring deals, is that generally if you're working with a charity or an RP, the charity gets or the RP gets 2 streams of income, and typically it will be a local housing allowance or housing benefit, as everyone is familiar calling it, and there'll be some additional costs that they can claim on top of it as well. So it depends where you are in the country, but sometimes it's called exempt housing management fees or intensive housing management fees. And the idea is those fees are used to fund the services that the charity and the RP are providing. Equally, they could get commissioned income, and that's not unusual in the homelessness space. That was supposed to happen with our Banbury site, where the local authority will give a certain amount of money for a certain amount of period for, say, 10 beds. The challenge comes when investors are trying to, I don't think there's a problem with investors stacking deals on the housing benefit or the LHA income, the housing benefit. It's when it doesn't quite stack and you're starting to chip away at the fees that the charity need to deliver their services. That's when it gets a bit difficult and a bit tricky. And then the question mark comes around sustainability of it as well. Is that a fair reflection of what you've experienced?
Very much so.
This deal has a rent review in 2 years, right? Now, the yield is quite good on it. The yield's almost 8% at the current rent, which is brilliant, all right? Now, if I sold that deal to my client at 8% yield, and then it gets a rent review in 2 years' time, and it drops down to 6 or 5.5, that's a problem, More than likely what happened here, I think, is a investor, and this happens all the time, an investor will go in there and be an investor, and they'll negotiate their heads off for a better rent, and providers will do it because they need the properties.
They really need it.
They do. But it's not sustainable long term. So that rent review has been put in there, and deliberately, because in 2 years' time, I can almost guarantee you that rent will be dropped. It will not be raised. So, and then what they've brought as a performing asset, because these are just investors. They don't, I mean, yes, they care about the sector, but they're investors, they're investors.
Sure.
And we understand that, and a lot of providers understand that investors are there to get a return, but you can do it ethically, and the numbers do work.
So until we talk to that provider, until we find out what's happening with those rents and how they came to that figure, we can't pass that deal on to our investor base.
We would never do that, no. We want to understand it more.
And presumably that's what your investors recognise, isn't it? You're keeping everyone safe. Actually, you're keeping the provider safe, and you're keeping the investor safe. And then, right.
What I would rather do is have that discussion with the provider now and understand what's going to happen. That person is aware that their rents are going to drop. Let's be clear and transparent about it.
Yeah.
That transparency
for sure.
Business is key.
Yeah. No, absolutely. Okay. And what about?
Sorry. Just one more thing to give you some idea. I was down in Swindon the other day, talking to the refugee provider down there, and they gave us a cracker of a rent offer on something. And I basically said, I rang the back up and said, what the hell's going on here? I said, that is way above what I thought it was going to be. I said, I told you at the meeting, I want sustainable long-term rent on this. He goes, yeah, it's fine. We have a budget at the moment. We're so desperate for properties that we're doing a enhanced rent for the term of the contract at the moment to get more deals, because there's so many people sitting in hotel rooms. So yes, they do have to budget sometimes. and that will be through the entire contract.
So that's where you're talking about
Okay.
getting income there,
Yeah.
David. That's where that comes in. So
in that situation, we spoke to them. There was a reason for it. The rents are fantastic. The investor's happy as, you know, I mean, they're getting 1,800 a month on a 5-bed HMO with, you know, full FRI basically on a 200 grand house. It's a pretty good deal.
Yeah, sure.
You know, so there are reasons this happens sometimes, and you can get some great deals sometimes, but you have to find out why.
Well, there's always a reason.
Yeah.
And if it's too good to be true, it almost certainly is, isn't
Almost
it?
always is, exactly.
Yeah, no, indeed. Okay, so what about, because I know in some circumstances with people that are involved in the sector,
Sure.
they'll set up the deal for you, but you never really get to find out who the provider is. So there's kind of a middleman sat between you and the provider. And, you know, I was talking to my partners about this morning on a call, and we were like, well, what happens when you want to refinance? You know, the refinance company is going to want to know who the ultimate covenant is with. So how does that work with you guys?
Do you want me to handle that? Or do you want to talk about that, Kristy?
Yeah, no, but you put the brokers in place for that, and you kind of educate the brokers so you can chat away. Sure.
There's a few reasons it's done that way, and we operate exactly the same way. Generally speaking, that's done that way because providers want it that way. Okay. They want it that way because they want a company like us to handle. So they have 2 people to call, and then we deal with the hundreds of landlords sitting behind that. Okay. They do that because it absolutely makes them mental dealing with property investors and landlords 24/7, pretty much. So yes, that's done that way for a reason from their point of view. As far as lending's concerned, if we need to send through an original contract through to a lender, we do. But
because we've got an agreement in place, so you know we've got an agreement in place with that landlord that you know they can't withdraw that contract is watertight. So
what would happen
if that's needed, then we would do that. But we, you know, we're very clear when we speak to people. We are a management agent. We work on behalf of the provider, and that's how we do it as a gateway.
Sure, but but what would happen? And I'm, you know, pardon for the punchy question, but
that's fine, go for it.
What would happen if you guys went bust? If my contract's with you as a company, you know, what would happen if is it a simple pass-through contract, or is there like a reservation agreement or something like that?
Then that provider always has the actual property owner's details on file.
Okay, all right.
So if there's an issue in that regard, they can just simply ring the property owner. They know exactly who the property owner is. They know who we're having an agreement with. All that's in place. They need to know that anyhow, basically.
They know that when they do their checks anyway, because ultimately they do a check before they'll accept that property. So they do check on the person, the property, the area, and that's why a lot of the time properties will be
rejected.
May be rejected because something's happened. So yeah.
Okay. So what about can you talk me through some numbers of some example properties? Take that. No, don't use that one in Swindon because that was
a crack
extreme. Yeah, but what say if I've got, I don't know, 5-6 bed HMO.
That's a location based question. So if you're doing, say, I'm talking about Birmingham, I'm talking about some northern areas, if that's easy enough.
Sure.
Okay, so Birmingham, if you're say doing a 4-bed mini HMO, so a 3-bed house with 2 reception rooms. Okay. That, if you privately rented that, would be, say, as a normal family home through a letting agent, traditional buy to let, maybe 800 quid a month gross. By the time you pay your mortgage and agent's fees and all that kind of stuff, 250 a month or something in your pocket, pretty standard buy to let.
Yeah.
Plus any voids, tenant finder fees, all that kind of stuff chewing into that. Okay. So pretty standard. Take that same house, convert it to a 4-bed mini HMO, which is 5 doors, emergency lighting, interlink alarms, any window restrictors, that kind of stuff, right? Fairly straightforward, thumb turn locks, about 5 grand in Birmingham. It's Birmingham, it's not the north. And that then goes from earning you 800 to about 1100 a month. Okay. And that's net in the landlord's pocket, by the way. Our management fee at 10% is already taken out of that. So they get about 1100 in their pocket. Okay.
So you go from 250 to 1100.
No, that's gross. So it's gross 800 originally as a private rental.
Yeah.
Now you go to 1100 with social housing. Okay. So general homeless, refugee provider, domestic violence provider, so on and so on. Okay.
Yeah.
The difference being is there's no letting agent, there's no voids, there's no tenant finder fees, there's no bills, there's nothing basically. Pay your mortgage, pay your insurances, the rest of it's money in your pocket.
Yeah.
What about damage repairs and so on?
Okay, so the owner of the property is responsible for the structure, the roof, and the boiler. That's it.
or anything major, say something collapsed, you know, it's any major.
That comes under structure, basically.
Sure.
But they would, you know, keep replacing the furniture, tidy up the house as and when needed. And that's where we come in as well, Dave, because we'll go in and do spot checks every 3 months.
Yeah.
And then we do a spot check report for the person who owns the property and take pictures and videos. And reassure that person that their asset is actually being protected with the provider. Okay. If there is any issue, then we can talk them through enforcement of potentially a break clause and get those people rehoused somewhere else and then move another provider in. So we've got all that in place to make sure that the asset is protected, the provider and the people. Because I was talking to you about this the other day as well, it's always the people for me in that property. Because ultimately, it sounds horrible this, but somebody said this to me the other day and it puts you, we are trading people. You know, these people are on leases and they're vulnerable. And if you don't have your structure in place, the amount of people that I talk to that are doing what we're doing and they haven't got the right insurances, it just so worries me because, you know, I fixed them and made them compliant because I think there's people in property that rely on you.
Yeah,
you know, it's
and I think most landlords, sometimes they don't know what they don't know, do they? You know, if there's a particular type of insurance that's required, for example.
Exactly, and that's where we're here to educate them. But it's just making sure that you're, you know, it's the simple things that they don't even think about because they're so excited. Your mortgage company needs to know the demographic that's going into your property. So does your actual buildings insurance. You know, that's really, really important. And sometimes they forget to do that, and then something happens down the line. So you know that's
interesting. So there's the insurance, there's the lender.
We make sure we sign all that off before we would even take it on. We need to see that the mortgage company sign that off.
Yeah. And what do you see as being the key challenges? So if I've got an HMO or someone on the call's got an HMO and just happens to be in an area that, I don't know, Blackpool, for example, that we know that there's a need. What am I not seeing? You know, what are the things that maybe, because I'm not in the sector, I'm not really seeing as the potential issues that you guys know about?
So from a social housing provider point of view, location for starters, okay, that's always a big one. So what I say to people is if you can walk out the front of the property, look left, look right, you can see shops, a Betfred or a pub, not going to work. Okay, too much temptation for the tenant profile. Okay, that's number one. Because quite a lot of HMOs in the north are above shops. Doesn't work. You know, and then if it's above, say, a curry house or something, then there's a fire risk. So they just won't take them. Occasionally providers do. 90% of them won't touch them.
Right.
Some do. So we do work with somebody who will take properties over commercial, but it's not like, it's like lending. It's very rare. You know, there's a very small percentage of providers that will do that, but they are out there.
I mean, for instance, if it was a mental health provider with very, very high care tenants who don't really leave the house that much, really doesn't make any difference.
Yeah.
Dealing with general
they've got that support there, normally somebody with them to support them doing regular checks. They've got 24-hour support. And they feel, you know, they feel comfortable because they're in that property most of the time and they get familiar with it. But I think the most important thing kind of to remember, you know, are the people in that property and the demographic when you're looking where you're looking. Some providers, I mean, somebody approached me the other day and they said, I've got a perfect house. I'm going to send it you through. It's in a really crappy location. And I said, but most of the time providers actually don't want them in rubbish locations. They want them in nice locations because that means that the people aren't identified as much. You know, don't just think a rubbish location that a provider wants that. You know, people need to get that out of their head. People deserve to be in a nice place.
It's busy streets in nice locations is probably a better way of describing that. Because as much as it's a cul-de-sac versus a busy street, okay? As much as the neighbours in a cul-de-sac almost always know each other and they're nosy, and it's just the nature of people in general. So will they notice a bunch of people, especially a general homeless provider where the tenancy is quite transient? They will definitely notice the tenant profile, and they'll usually complain to the local authority because it's human nature, because they don't understand what's going on. They don't understand it's just people who need a home. So quite a lot of our social housing providers don't take anything cul-de-sacs either because it just causes hassle. Right or wrong, they understand human nature.
It's also a directive from the council, so the council might say to them, so for example in Blackpool, you can, some providers will take on seafront buildings, but in Blackpool, for example, a lot of the seafront buildings are hospitality trade, so they don't want to damage that trade, understandably. So, you know, they want
struggling anyway, isn't it? They don't want to,
you know,
put any more pressure on it.
Yeah, ultimately, it's understanding the need of who you're working with. That's, you know, and then you can go out and shop.
Okay. So again, looking at it from an investor's point of view, you know, put my properties forward to you, they don't quite work, or for whatever reason, would you then sort of consider helping to source to order to fulfill the need? Is that something you guys do? And do you want to talk about that a little bit?
I'll let Simon, because again, Simon's ideas coming to fruition now. So we've got sourcing. So
it actually came through necessity more than anything. So over the last year or so, year and a bit, this business has been in operation. I've been talking and negotiating with literally hundreds of sourcing agents trying to find deals for our investor base. Right?
Poor you.
Yeah. I think I'd rather just go drill a hole in my head. I think.
There's some really good ones out there.
I know.
We got, but honestly, the ratio of good ones to bad ones is not fun. Yeah.
And I don't even think they're bad, Simon. I just don't think they've been educated, so they don't necessarily know what they're doing.
You know what it is? If they got a bad deal and they can sell a bad deal very simply to somebody for the same fee as they can do 10 times more effort to sell a good deal to somebody, they just sell the bad deal because they make so much money in this business. I get it. You know, they're in a business for a certain reason, but we just can't work with those people, you know? So what we do now, basically, we opened up a new business called KISS Sourcing, which is just literally short for Kristy, Isabel, Simon.
So Isabel's our other business partner.
Yeah. Now, Isabel came into this because she's an investor. She had exactly the same problem with sourcing agents, just frustrating. And she basically turned around and said to us, how do we fix this? I said, the only way to fix it is to actually hire the sourcing agents in-house as staff and control what they do. So she goes, great, how much money do we need? Let's go do it. So we did, basically. Okay. So she funded us up so that there was enough money in the bank that we can afford to pay the staff needed to bring on board to grow the business for a few months until they're earning. And we literally pretty much signed our first staff member up last weekend.
Great.
So that's going through now. And that's how we fixed it, basically. We saw there was a need, there was a problem. Look, don't get me wrong, 4 or 5 independent sourcing agents we work with who are great, and they bring us deals all the time. But we need 10 times more deals to feed our investor base and the demand in the market. So
nice problem to have.
Yeah, it is. It's actually a really frustrating problem to have, actually. Because,
yeah, of course. There's money sat on the table there, but you can't quite grab hold of it yet.
Yeah, I know. Yeah.
So, I mean, let's talk about the money side of things, if you don't mind. Maybe you don't want to share it in a sort of semi-public forum like this, but you know, again, if I was an investor and I've got money to spend, and I know I can raise funds as well, either from other investors or from lenders, you know, how would engaging with you guys look?
Do you want me to do that one, Kristy, or do you want to have a chat?
Yeah, so you probably need to cover how Auxilium charge and then how KISS charge.
Sure.
Yeah.
So always okay, so we just had a chat literally the other day to an investor at Dubai. They're an expat, earning good money. They like the model because once the property is actually handed over to the provider, it's very, very hands-off for them. I mean, trying to run, say, a privately let HMO from the other side of the world versus running one of these as a 5-bed HMO is much simpler. So they get the model. Lending's a bit harder, but I think that conversation we had then went for about an hour. So we spoke about what they understand about the market. Then we explained how it works, how the model works, how we as a company make money, what we charge them, how we charge them. We discussed with them the sourcing business. We discussed with them the anti-money laundering ID checks we needed to do with them. We got a really good idea then about their risk profile as an investor. We spoke to them about the property types they'd be quite happy to buy, what their expected ROI or yield would be. And then we just build a model about what their investor wants, and then we go source properties for them. That's really how it works.
But what sort of costs would be associated with it? Let's say, for example, I say, you know, all right, I'm willing to give this a whirl. I know you're sort of ramping up your sourcing, and maybe in 3-4 months' time you're ready with some new properties. I want to give this a whirl with a 5-bed HMO. You know, dip my toe in the water.
Okay, so from the sourcing business point of view, our sourcing fees are fairly industry standard. So a family home, 2.5 grand, a small HMO 3, a 6 or 8 bed HMO 4, lease option 5. Pretty standard sourcing fees for them.
And then if it's a development, obviously we'd have to negotiate that.
Yeah, sure.
Usually 1 or 2%, depending on what it is.
And would that be a finished HMO, or would that be one that maybe needs
depends on what the investor wants. So some investors, what we generally find is the more high net worth an investor is, the less renovation work they want to do. They just want to buy a done condition property that needs they want their cash working for them as fast as possible. So they're quite happy to park money in a deal, 30, 40, 50 grand doesn't really bother them, if that thing can start generating cash flow within a month or two of completion date.
And they're quite happy with 30% ROI, aren't they, as well, around that level? Yeah,
well, investors who even understand what ROI means, because most of the people we talk to nowadays don't even know what it means. Yeah. They just know about yield. They just
So why don't we stop there then for a second? And why don't you explain from your point of view what it means? Because I agree with you completely. People talk about yield, ROI, ROCE, all.
I was going to say to you, don't get
sometimes means different things. Sometimes means
different things. Kind of worms here, right? You get that, don't you?
Go for it.
So the difference between net and gross, Simon, do you little...
Oh yeah, I had a slide for this one. This was a really interesting conversation. So there's two schools of investors that we talk to. Okay, there's the people who have not a lot of money and they've come out of training schools, or they're mom and pop investors and they're looking to get into the sector. They care about their small amount of money. How can they use it the best way possible? How can they get it out of every single deal as much as possible to reuse it?
Which is fine.
Which is fine. Yeah. Those people, we talk about ROI, which is return on investment. How quickly does the cash flow pay back the money left in the deal after refinance? Okay, and that translates to a number. And then we just try and buy for them. Almost always with those kind of investors, we have to buy, refurbish, refinance to add value, to pull money out of a deal at refinance. Standard issue. Any training school, any book will tell you that. It's property in any country, basically. Buy, refurbish, refinance. Now, that is completely chucked on its head when you're talking to very high net worth individuals. So, I mean, we work with some professional football players, for instance. Those guys are earning 30, 40 grand a week. It's huge money. Do they really want to wait for a property to sit and refinance and refurb over a 6 months period to make 20 grand at the back end, pulling money out of a deal? No, because it's half a week's wage. They don't really care. But their value of money is totally different to normal humans, basically. Okay? So to them, what they want to know is, this chunk of money I'm taking out my bank account that's sitting at 0.5% or 1% or whatever, 3, 4, 4% in an ISA, how quickly can that be making 6 or 7% in one of these properties? And what they want is to buy done up properties that need very little work done to them, and they want that cash flow in the bank as fast as possible.
So, but I presume. Sorry, son. Go on.
No, I'm just saying those guys just talk yield. They don't even know what ROI means. They never heard of the term. They don't care about it.
We had to educate them a little bit though, didn't we, Simon? Yeah. And we had to do a little presentation on the difference between gross yield and net yield.
That was a very interesting one, actually. Sorry to just talk about that for a second, then we'll get on with it.
No, go for it.
So all high net worth clients, they solely talk about gross yield, and almost always they're HMO buyers. So they're used to talking about 15% gross yield on a privately rented HMO. Okay, and that's less costs, bills, voids, tenant finder fees, agents fees. It's a lot, basically. Generally ends up being about 40% on average when you look at it over a long period of time. So the same property rented out to a social housing provider sits at about 8% yield. Okay, and they're used to 15. They're like, this doesn't work. So I said, well, hold on a second. This is about the money that ends up in your bank account at the end of the year. That's profit. Okay, because profit pays your bills and pays for the paint job on your Lamborghini, right? And so what we did was, we had an investor who was looking at doing this. We ran the numbers on the books of his portfolio of HMOs in Hull over the last 2 years, and the net profit difference a month was £40.
Wow.
8%.
The gross yield.
And then you just look at sustainability, don't you?
Yeah.
So.
In my head, gross yield is before your voids.
Yeah.
Okay, right. So,
but
I think most
a lot of the people we talk to, even in our social strategy group, who are doing what we do, the investors come to them and they're absolutely set on gross yield, and it's like, no, you need to strip away your costs and look at the net, because net is where it is, and you'll find there's very little difference. But the difference with our strategy, yes, you might lose £40 a month, but actually it's sustainable for 5 years, and your voids could go higher than 40, but that's what we use as an average. So
it's the old turnover vanity, profit is sanity conundrum, isn't it?
I mean,
but surely the most important thing from most investors out there are not, they're not Premiership footballers and ridiculous money there. But they've got a finite amount of cash, and there's a lot of there is a lot of cash out there. And a couple of my co-directors in Cornerstone Place, they run the SAS Alliance, and the SAS SAS pensions, and on average these people have got 300 grand in their SAS pension. That's across 3,000 people.
Yeah.
So So most people in that scenario will probably take some form of lending and leave some cash in, as you said earlier. So really you're looking at the return on the cash left in the deal. And I think that's what you were talking about when you said 30%, wasn't it, Kristy? Is that about right?
Basically what it means is all we do is how
3
much
years, money out in 3 years.
How much money is left in the deal after refinance? What is the net profit per month divided by that equals the amount of months. So that means the net profit out of this property is going to take 12 months, 24, 36 months to pay back before you're infinite
They're
return.
quite happy with getting their money out in 3 years.
Yeah.
People that we work with.
So there's two very different conversations with investor bases. We find out who they are, what they want to do, and then those conversations happen.
Right. Okay. So that's on a finished product as well. So that's not even necessarily adding value by doing a refurb.
No.
Exactly.
So there's two conversations. There's what's the long-term yield you want out of it once it's renovated, complete, refinanced, handed over. What kind of return are you expecting long-term on your money, basically? So say it's $100,000 asset, right? And it's making 10 grand a month. That's 10% return. You know, everybody's going to be happy with that. Some people are, I mean, I just got offered a portfolio today of 30 properties up in the Northwest that are sitting at 5 to 6% return, but they're family homes, 2 and 3 bedders, all with social housing contracts on, way less risk than say doing HMOs in Barnsley, for instance, where they're charging you council tax per room now. You know, yes, we picked up a HMO, they're dirt cheap and the yield's fantastic, but the exits are very limited on that property. Whereas
that's the other thing we educate our investors on as well, Dave. Really, really important for us. We talk about exits, but we don't necessarily talk about exits in property speak. We're talking exits in terms of, right, if this provider something were to happen, or in 5 years you decided you didn't want to work with that provider, what other provider have we got in place? Does that property fit mental health? Does that property fit domestic violence? So that's kind of what we're looking at as well. It's not just actually, can this be flipped on? We're looking at all the different exits as well across the piece.
All right, well, and just sorry to be jumping around a little bit, but you mentioned about the sourcing fees. Presumably, there's like a management fee that you guys have in there as a piece of layer, as a layer in there as well.
So how our fee structure works for Exilium, it's obviously sourcing is a separate business. So that's just providing property. If you have your own property, you obviously don't need to pay that.
I see.
But what we do basically is we have a £200 submission fee. So what that does, if you're say purchasing a property, you get offer accepted in the postcode areas we said you can work in, right, with this style of property. We say, right, get offer accepted, pending survey, pending social housing contract approval. Okay. You then pay us the £200 and then we take that to the social housing provider. We go through all the checks of the client. We make sure that the location's okay. The provider will do local authority checks. They'll do a police background check on the potential owner, the location, make sure there's no antisocial behaviour in the area, so on and so on.
Because we can't, we can take that property on, but that submission fee is a bit like a tenant finder fee, if you like. So that's for the work we're doing, because at the end of the day,
sure, you're paying for your time to film an admin point of view.
It's the minimal we can get away with it, basically.
And believe me, you can ask anybody that does what we do. We do a lot of background work that
I'm sure you do.
So we earn our £200.
The point of doing that process is that you don't want to buy a house, complete on it, and then you can't get a contract. Right.
Absolutely.
What that fee does is it secures your contract generally for a period of 6 months. You get 6 months to hand the property over in the condition they want it. Right. That allows you to buy the property, complete it, do any works, and there's a social housing contract at this rent offer waiting for you. So it gives you a bit of peace of mind to buy that property knowing there's something at the back end and that rent's coming in.
Okay. All right.
And then,
I mean, it's pretty compelling, really, isn't it?
Simon, handover and inspection.
Yeah, so then basically there's a £400 handover fee. What that does, that just pays us pretty much to do all the viewing at the end of it, and the inventory and all the paperwork and all that other rubbish you have to do,
So it's £600 for that, and then 10% ongoing management.
Right.
Yeah. Okay. The only other thing we do sometimes, if it's a really big build, somebody's doing a full renovation, we do a couple of mid-viewing renovations at £100 each. Now, that came about basically because when we started doing viewings with providers with done-up houses, they would say, right, is the underneath that stairs fireboarded? Yes, it is. Do you have photos of it fireboarded before it's painted? No. Great. So out come the keys, off comes the paint, basically.
Just pull it off.
They would just scrape it off to see if it's pink.
Yeah.
Because they want to know. They don't trust landlords.
Yeah, no, I agree. Yeah.
So what landlords were doing was crying and moaning and groaning because they were scraping paint off walls everywhere. It's actually cheaper for them to pay us just to go take photos of it and inspect it. And honestly, what we find sometimes is landlords and builders get cheap and they get cheeky and they try to cut corners. And it's much easier to pick it up when they've not painted and finished stuff than it is just to do it at the time. So it just saves a lot of cost long term and time and energy and effort. So very worst case scenario, if it's a massive build, you're looking at about 900 quid up front. If it's just an existing property, 600 quid, and then 100% management long term.
Okay.
Not horribly.
All right. I mean,
try and keep it as effective as possible.
If there's anyone on the call that's got any questions, use one of the features in Zoom to ask something. But I'd like to, again, maybe a little bit of a punchy question, but
Go for it.
Yeah, why wouldn't I do this?
Okay, everybody hears the horror stories about renting directly to the council and your house getting trashed. That happens all the time. That happens with some direct to council schemes. It certainly does. We know somebody in Coventry who had their serviced accommodations rented out by the council. They didn't even know about it, and their serviced accommodations were getting absolutely trashed, basically. That does happen. I mean, does your property sustain some damage sometimes during this period of rental? Yes, it does. Do you have to pay for it? No, you don't.
Okay.
On what we use.
On the system that we use, yes.
Yeah.
Systems out there.
It depends what you negotiate. So some councils will put people into your property, say on ASTs, but you are responsible, and they will pay you that little bit more, which is great. But then you're responsible for all the voids and maintenance and the tenants. So it just depends what you want. And I think I was talking about this to you the other day as well, Dave. For me, in that respect, when I am fully established and I've got loads and loads of money and money is no object, I'll take those types of people on and I'll suffer those voids because everybody needs a home. But right now, unfortunately, I can't do that. And I appreciate that some landlords...
It's not right for everybody as well, is
it? They're building their portfolios and they can't just afford those voids just yet. But a lot of the people we work with would do that in the future.
Yeah.
They're more than happy to suffer those voids if they've got the cash flow to back it.
So I can tell you...
that's how some providers work as well, So
I can give you some examples of stuff over the last 6 months or so there's been issues with landlords. So we had one property owner the house that she wanted to pass over had been in the family for years. Her sister lived 2 doors down. She was very concerned about her sister living 2 doors away from one of these properties, right? So what we said to her was, why don't we use our domestic violence provider for this property? So then it's basically women and children who've been through domestic violence.
Yeah.
It's not general homeless. They're not likely to have alcohol problems. There's certainly a less risky tenant profile. For her, that was a great solution for her. And when she spoke to her sister who lived a couple of doors up, her sister was more than happy to have a couple of women who've been through domestic violence living in the house versus general homeless. Sometimes we have to match a provider to a client's need. And that might, look, honestly, those women going through domestic violence could have gone through it because of drug addiction. We don't know.
Yeah, sure.
The perception that people have about a certain tenant profile puts them off sometimes.
It's sad, yeah, and do you know what? A lot of homeless people are just happy to have a roof over their head and somewhere to stay, and you don't tend to hear very much from them. We only ever hear the horror stories, and if you actually worked out a percentage of the total people that are being housed in this sector, it isn't actually that much.
It's funny you say that. I was told a story the other day from a chief exec with a charity that we work for. And he was saying in one of our properties, he was saying, because I've got to tell you this story. He said, we've got this guy in there who is, he's an entrenched homeless chap. He's been on the streets for 6-7 years or so. He's a real tough lad. And they put their longest serving support worker to look after him. Again, tough bloke, been in the industry for 20 years, has seen a few things. And apparently the guy had come off the streets, was talking to him, and he just burst into tears saying, I can't believe I've got a roof over my head. It's just amazing.
Yeah, exactly.
And this hardened social worker also burst into tears. There's these two burly hardened lads having a good old sob in the middle of the lounge about the situation. And I thought that was a really lovely story, and it just goes to show that you're right. It's easy to tar everybody with the same brush. Even if you're in the industry, sometimes you find your instinct is to say not think the best.
Yeah.
But it's some people just need a leg up. We
get this a lot with the asylum seeker contracts we work with. People instantly get their hackles up with that. Oh, why would they're going to wreck the neighbourhood? I'm like, okay. The people that stay in that house primarily are people waiting for the UK government to say, yes, you can stay in our lovely country.
Why would they trash it?
Do you think they're going to be kicking off? They are going to be the best tenants in the universe, They're not there. They're there for somebody to say, yes, you can stay in this country, So it's
Yep.
We did it. I did it recently. I work a lot with veterans charities. You've interviewed Sean and Andrew at Healthier Heroes. I think they're doing absolutely phenomenal work.
Yeah.
But I do it with some down here because, unfortunately, if somebody comes into, say, an area of the country, but they've moved from somewhere else, the council can't necessarily accommodate them just because of some of their covenants. So this young lad didn't really have anywhere to go, and he had a drug and alcohol addiction, and he literally had nothing. We negotiated with the council and got him a home. So he's, worked with somebody who was doing that. He's now got a home. He's got furniture. He gets food parcels delivered. And it was purely, the guy I was working with, I won't steal his credit. He was the one that negotiated the housing and things. I just, helped him with the furniture and things like that. But that person, a private landlord wouldn't take him on because of his drug and alcohol addictions. Nobody would touch him. And it was just working in conjunction with the council that we got a roof over his head. And he's doing amazing things now. So for me, that there is a home for everybody. And as long as they've got the right support in place, it's all about housing first. Plug Amy's white paper. I use it as my Bible. I've got it printed off. I read it all the time. If we can get that model right with the right support in place, the wheel's your oyster. That's what it is.
Cool. Good. All right. Look, we're going to have to sort of wrap things up a little bit here. Is there anything else that we maybe have missed that you guys just want to flag up, or the obvious question is how do they get in touch with you?
Yeah, I think we need to circle back around to what we spoke about first of all, is mindset. What I spend half my time doing is changing the mindset of property owners and investors about how this model works. Half the hour-long conversation I have with them, I just setting their mind straight about what they think they know about it and what the actual truth is, basically. And once people understand how this works, and it's just about people in homes who need a bit of help, then they get their head around it and they realize that from an investor point of view, then it works great. And they're all in, basically. But it's very rarely do I get an investor or landlord who contacts me who's all in straight away. There's usually a bit of hand holding, usually a bit of mindset change that needs to happen first.
I'm sure the questions I've said today have ones you hear time and time again.
I think the only thing we haven't covered, Dave, which is probably something else we do and we've kind of branched out and started doing, is that we support providers as well to build their business models, and we can consult on that. We can also, consult on various other services. We have support networks at the back. If it's something we can't help with, we can get them to do. So, for example, a provider may come on board and they haven't got a clue how to cost something up or how to start that service off. So we can provide that advice. So that's another little branch to our arm, if you like, that we do, arm to our branch that we do. So, happy to chat to providers as well if any are on the call and they're struggling, or people that really want to start out in this sector and they've got a passion for it but they just don't know what to do.
Kristy's very kind. They're saying we about that one. It's not a we, it's Kristy. There are different skill sets in this business, and that's very much a Kristy thing.
Well, that's just like
I just help them become sustainable. That's what's so important, that they're sustainable and that they're achieving the right rents. And I understand they're desperate for houses, but get your model right and it will work for most people. I think I'm fortunate that I've got a property training background as well, so I can help in both of those elements. So
okay, brilliant. And so how do they get in touch with you?
So we've got our email addresses are dead simple. It's Kristy, Kristy at auxpm.co.uk, and then it's Simon at auxpm.co.uk. So they can get hold of us that way.
You're both in the Property for Good Facebook group.
We are as well.
If you search your names up in there, or actually you should be able to find the advert for this presentation, so you can click on you there and link up in Facebook, I'd imagine, as well. Great. Well, if there are, let me just go back to share the screen.
I always say as well, Dave, just one little thing, let's house as many people as we can. That's just me.
Yeah, that's the strap line for Property for Good, which is making a difference one room at a time. So
one room at a time, and that's how we look at it. How many rooms have we filled, and it gets us excited, doesn't it, Simon?
Yeah.
Okay, so then
Jamie, then that's my other half.
You almost called me Jamie, then, didn't you? I'm your work husband, not your house husband. You always get confused.
Okay, I feel like we're starting to venture into areas we shouldn't do now. Right, thank you, guys. It's been a really good session and really interesting. And
thanks for having us.
Yeah, I mean, I thought I understood your business model, and actually I've learned more today as well. So I think it's been really valuable from my point of view, and I hopefully for others as well. The next event is on, as you can see, Friday the 26th of October, with a guest to be confirmed, and hopefully other people can make it on there as well. But I think if we're done, I think I'd just like to say thank you again for coming along today, and thanks for the attendees for attending as well.
Thank you for having us. Really appreciate it.
No problem at all.
Have a good day.
Thank you. Bye.
Bye.